Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on SPY, IWM, and QQQ on the daily and weekly time frame. So we ended the week with a little bit of bearish momentum in SPY, closing down near the low of the day on a slight uptick in volume. But if you look at perspective and where we are coming from after two bullish gap ups to the upside, the consolidation that we've seen over the past 3 days has not even really given back the last bullish day we saw to the upside. So our first short-term target will be the gap fill at 237.41. But in my opinion, we would have to see a bearish increase in volume in order to be looking to the second gap fill in the short term up at 235.31. This is still a bull flag of consolidation on the daily time frame. You see the big move we made to the upside. You could draw parallel support and resistance from this healthy consolidation at this point. And like I said, SPY is at the all-time high if you adjust for the dividend. But if you don't want to deal with that, you look at SPX, the S&P 500 cash level, and that is currently a double top at the all-time high by about $4, I believe. So there is the potential. I know this isn't a perfect looking cup and handle pattern, but I'm more concerned with the psychology of the patterns and not whether they are textbook definition perfect. And the psychology of the cup and handle pattern is you have a left side of the cup resistance, you consolidate, the bulls recover, you try to break the left side of the cup resistance, and the bulls are unable to do so, so they form a lower high on the right side, and then they begin to consolidate, and that consolidation is the handle of the cup. And then the bulls gather the strength to break out, break the left side resistance, and see a big move to the upside. So that is a potential scenario for a blue sky breakout. And we have the FOMC Wednesday, so that would be the catalyst. We also have Facebook and Apple earnings. We know the tech sector has been a big leader in the S&P 500. So if there are bullish reactions there, that's another potential catalyst. So we are still favoring the bulls for a new all-time high in the short term. And again, to change that would be a increase in bear volume or a big red candlestick, things like that. So we'll be keeping an eye out. But as of right now, bulls are still healthy. Weekly time frame, I already saw the new all-time, well, on SPY, we saw the new all-time high on the adjusted rate here. And we built a base of support, normal healthy consolidation, and same thing. Whenever I say that, you're looking back at the move to the upside, and you're comparing the amount of consolidation compared to the move to the upside. And at this point, we've given back about 15, maybe 20% at most of the bull move to the upside on that month and a half of consolidation. And now the bulls look ready to go for more upside. So it's going to come down to the FOMC as to whether or not we do get that blue sky breakout this week or we see further consolidation and the bulls need to be cautious of that double top. IWM, this is a lot more significant bearish activity. This is not a bull flag. The increasing bear volume and the big red Marubozu candlestick and the close down near the low of the day. We already filled the first gap. Next gap to the downside is 137.55. So this is what the SPY bulls do not want to see, this kind of candlestick show up early next week. Weekly time frame for IWM, rejecting from the upper Bollinger Band, bearish reversal doji. So not the strong end to the week the bulls were looking for. And we're looking at that gap to the downside, the middle Bollinger Band support. Overall, the bulls are absolutely still in control. And the good thing for the bulls here is they don't have to worry about that double top. They got a clear new all-time high and saw continuation to the upside. So really anything above 133.66 is going to be a higher low on the daily time frame, keeping these bulls in control. As we know, QQQ in the tech sector has been on absolute fire. New all-time highs. How many days in a row now? 5 days in a row. Every single day of last week was a new all-time high. We're riding the upper Bollinger Band support the past 5 days, staying in breakout mode, and we are looking up at 136.34 as that all-time high. If we do begin to consolidate, where there is a gap at 130.35.75, that's the first gap, and then there's another gap down here at 134.28. So we'll be keeping an eye on those levels, but again, as of right now, the bulls are in full control. A little bit of bearish momentum at the end of the day, but with Facebook and Apple earnings this week, those are going to be the main driving factors behind what we see in the tech sector short term. So I appreciate you watching. Well, weekly time frame for QQQ, almost skipped it there. Not much to say besides the bulls are in absolute full control, looking great. Fending off a bearish MACD cross, new all-time highs, holding exponential support. This is the most bullish weekly chart out of the three. So thanks again, and we will see you tomorrow.